Most empires don't collapse when people are afraid. They collapse when people feel comfortable. That sounds backwards, but it's one of the oldest patterns in history. The most dangerous moment in any empire is not when the streets are burning or when armies are marching. It's when daily life still feels normal, when the trains run, when the stores are full, when paychecks still arrive, when people scroll their phones and assume tomorrow will look roughly like today. That sense of normality is not stability. It is inertia. In Rome, citizens kept going to baths in the markets long after the treasury was empty. In the late Soviet Union, people still lined up for bread and went to work while the entire system was already bankrupt. In 1929 America, most families felt fine right up until the stock market fell off a cliff. The pattern is always the same. Systems fail quietly before they fail loudly. What makes this phase so dangerous is that nothing feels urgent. There is no single event you can point to and say, that's when it started. Instead, things become slightly harder, slightly more expensive, slightly more tense. People adapt. They always do. And adaptation masks decay. Wages stop rising, but people take on debt. Prices go up, but credit fills the gap. Governments spend more, but borrowing hides a cost. The surface stays smooth while the foundation cracks underneath. The system continues to function just well enough to convince everyone that it will keep functioning forever. This is a phase every empire reaches before it begins to lie to itself, not in the sense of obvious propaganda. The lies are quieter than that. They take the form of comforting narratives. This is just a cycle. We've seen worse. The fundamentals are strong. The system is resilient. Those phrases become mantras, repeated by officials, by media, by institutions that depend on public confidence to survive. Confidence is the fuel of complex systems. Once it breaks, everything breaks. So those systems become obsessed with maintaining the feeling of normality, even when the numbers underneath no longer support it. You can see this in financial markets when debt explodes faster than income. You can see it when governments promise benefits they mathematically cannot pay. You can see it when central banks print more money to keep things looking stable. None of this feels dramatic in the moment. It feels technical, boring, bureaucratic. That's what makes it lethal. People imagine collapse as a sudden shock, but historically, it is a slow, psychological drift, a gradual separation between what people are told and what they quietly experience in their lives. Rent rises faster than wages. Food costs more. Savings don't stretch as far. The future feels smaller. But because it happens slowly, no single day feels like a crisis. The danger is not that people don't notice. The danger is that they get used to it. When an empire reaches this phase, it still has power. It still has armies, institutions, technology, and wealth. But it begins to lose something far more important: credibility. The promise that the system will keep working the way it always has. Once that promise weakens, every decision becomes more fragile. Businesses invest less. Families save less or take more risks. Governments borrow more to fill the gaps. The entire system starts leaning forward, relying on the future to pay for the present. That's the moment when collapse becomes baked in, not because disaster is imminent, but because the margin for error disappears. There is no buffer left. Every shock becomes dangerous. Every unexpected event threatens to push the system over a line it can't return from. And the scariest part is that most people living inside this phase don't feel like they're in trouble. They feel like things are off, strange, tighter, less forgiving, but still normal enough to keep going. That is what makes this the most dangerous phase of an empire. Because when everything feels normal, nobody prepares for what comes next. At first, nothing feels broken. That is the most dangerous part. You wake up, the lights turn on, stores are open, money still moves through your phone, salaries still arrive, the surface of life looks stable. But underneath, something has quietly changed. Every collapsing system reaches a moment when it no longer grows by creating value. It survives by extracting it. At that stage, the system stops serving people and starts consuming them. It doesn't do this loudly. It does it slowly, through rules, incentives, and invisible pressures that feel normal. Debt becomes easier to create than wealth. Speculation becomes more profitable than production. Assets rise not because they are better, but because more money is being pushed into them. This is where illusion replaces reality. When governments, corporations, and financial markets all become dependent on borrowed money, the economy stops being a machine that produces things. It becomes a machine that recycles promises. And recycled promises feel real until too many people try to redeem them. Look at what happens in late-stage empires. Credit expands faster than wages. Asset prices climb while productivity stagnates. The middle class feels richer on paper, but poorer in daily life. People think they're moving forward because numbers go up, but what is really happening is that the floor is quietly sinking. The system begins to pull future wealth into the present. Borrowed money makes today look strong by stealing from tomorrow. This creates a strange psychological shift. People stop asking whether something is sustainable. They only ask whether it's still rising. Homes become investments instead of places to live. Stocks become lottery tickets instead of ownership. Even education becomes a debt instrument instead of a tool. Everything becomes financialized. And when everything becomes financialized, stability disappears. Because now the survival of the entire system depends on confidence. Not real productivity. Not real growth. Confidence. As long as people believe the numbers, the machine keeps running. That is why governments work so hard to protect the story that the economy is strong, that inflation is temporary, that debt is manageable, that the future will somehow pay for the present. But confidence is fragile. Once cracks appear, people start behaving differently. They stop saving in currency. They rush into assets. They try to escape risk by moving into things that feel solid. This is not greed. It is fear wearing a mask. Late-stage systems create a constant feeling of quiet anxiety. People may not know what is wrong, but they feel it. They sense that something no longer adds up. And when that feeling spreads, behavior shifts in dangerous ways. Consumers borrow more because they feel behind. Governments borrow more because growth no longer covers costs. Corporations borrow more because financial engineering becomes easier than innovation. Debt stops being a tool. It becomes a fuel, keeping a dying engine alive. At this stage, the system no longer corrects itself. It cannot slow down. It cannot reduce risk. It cannot unwind without causing pain. So it accelerates instead. More stimulus, more leverage, more promises layered on top of old ones. Each new cycle buys time, but makes the final reckoning larger. That is why late-stage collapses feel sudden when they finally arrive. They are not sudden at all. They are the result of years of invisible tension building under the surface. And by the time the pressure becomes visible, the structure is already too weak to hold. The empire doesn't fall because people stop working. It falls because the system stops being honest. In the next phase, that dishonesty becomes impossible to hide. Numbers start lying. Prices start moving in strange ways. And trust, the most valuable currency of all, begins to quietly evaporate. By the time an empire reaches this phase, something subtle but dangerous has already happened. The system still looks powerful. Its institutions still function. Its markets still trade. But the invisible glue that holds everything together has started to weaken. That glue is trust. Trust in money. Trust in contracts. Trust in the idea that tomorrow will be better than today. Once trust begins to erode, even slowly, the entire structure becomes fragile. Because modern economies are not built on gold factories or land. They are built on promises. A dollar is a promise. A bond is a promise. A pension is a promise. A bank account is a promise. When people believe those promises will be kept, the system works. When they begin to doubt them, everything changes. You don't see this shift in headlines at first. You see it in behavior. People start holding fewer long-term assets. They prefer liquidity. They move money faster. They avoid commitments. Businesses shorten investment horizons. Governments rely more on emergency measures. Markets become more volatile, more emotional, more reactive. This is not random. It is the psychology of a system that no longer trusts itself. Late-stage empires become obsessed with stability on the surface, while instability grows underneath. Central banks try to smooth every downturn. Governments try to absorb every shock. Financial markets are trained to expect rescue. Over time, this creates a dangerous dependency. Risk no longer disappears. It just gets pushed into the future. And the future keeps getting smaller. When trust weakens, people stop believing in long cycles. They stop believing in long plans. They begin to think in survival terms instead of progress. That changes everything. Savings turn into speculation. Investing turns into gambling. Work turns into a race to keep up. Even relationships become transactional. This is what financial stress does to society. It makes everyone more short-term. And a short-term society cannot maintain a long-term system. Eventually, cracks begin to show in places that used to feel permanent. Currency purchasing power drifts downward. Government debt grows faster than the economy. Inequality widens, even during good times. The story remains optimistic. The math does not. At this stage, leaders often respond with confidence theater. They talk about strength. They celebrate market highs. They point to growth numbers. But those numbers are being propped up by debt, not driven by real expansion. That distinction matters, because debt-fueled growth behaves differently from real growth. Real growth builds resilience. Debt growth builds fragility. One can absorb shocks. The other amplifies them. And the longer this imbalance lasts, the more violent the eventual correction becomes. This is why late empires often look strongest right before they weaken. The numbers look impressive. The cities look vibrant. The markets look unstoppable. But underneath, the system is losing its margin for error. Every new problem requires a bigger response. Every slowdown requires more intervention. Every crisis demands more borrowing. Eventually, even trust in intervention begins to fade. And when that happens, the empire enters a phase where control starts slipping. Not all at once, but enough to change the trajectory. The machine still runs. It just no longer knows where it's going. When a system reaches this phase, nothing dramatic seems to happen at first. The streets are still full. The market's still open. The news still talks about growth, recovery, resilience. But underneath all of that, something fundamental has shifted. The system is no longer running on stability. It is running on intervention. Control replaces balance. Every modern empire eventually reaches this point, not because its leaders are stupid or careless, but because the structure has become too complex and too indebted to function on its own. When something wobbles, it must be fixed. When something weakens, it must be supported. When something threatens to fall, it must be held up. At first, this looks like competence. Central banks lower rates. Governments pass emergency spending. Regulators adjust the rules. Markets relax. Confidence returns. But each time this happens, the system becomes a little less able to survive without help. Over time, financial markets stop reacting to reality and start reacting to policy. Prices no longer tell you what things are worth. They tell you what investors think authorities will do next. That is, when the economy quietly transforms into something else. It becomes a policy-driven machine. Growth is no longer organic. Risk is no longer priced honestly. Losses are no longer allowed to fully appear. Everything is smoothed. Everything is delayed. Everything is rolled forward. This creates a dangerous illusion. From the outside, it looks like stability. Inside, it feels like tension. Every time pressure builds, it is released with more borrowing, more money creation, more intervention. But pressure never disappears. It moves. Debt piles up in government balance sheets. Risk moves into pension funds and banks. Speculation flows into markets and housing. The system spreads fragility across everything. People sense this even if they cannot describe it. They feel that money buys less, that security feels thinner, that the future feels less predictable than it used to. That feeling is not psychological. It is structural. Late-stage empires begin to spend enormous energy keeping the present from collapsing, even if it means weakening the future. They borrow from tomorrow to stabilize today. They sacrifice resilience to preserve appearances. And for a while, it works. But each intervention makes the next one bigger. Each rescue makes the next crisis harder to contain. Because the more the system is controlled, the less it can correct itself. Small failures that should have happened are delayed. Small losses that should have cleared are postponed. Imbalances that should have shrunk are allowed to grow. Eventually, everything becomes too large to unwind gently. That is when control starts to slip, not because leaders stop trying, but because the machine they're trying to manage has become too leveraged, too interconnected, and too fragile to respond the way it once did. At this stage, even good decisions produce bad outcomes. Raising rates causes stress. Lowering rates causes bubbles. Spending cuts cause slowdowns. Spending increases cause debt explosions. Every option carries danger. That is the signature of a late-stage system. No path leads to real stability anymore, only to different kinds of instability. And the longer this continues, the more everyone becomes dependent on a system that can no longer stand on its own. When the illusion of control finally begins to crack, it does not shatter in a single moment. It fades. The world still looks familiar, but it feels different. Something in the background no longer feels reliable. Markets become jumpier. Currencies become weaker. Long-term planning becomes harder. People don't panic all at once. They adjust, slowly at first, then all at once. Money starts moving faster. People try to protect themselves from uncertainty by shifting into things that feel more solid. Assets rise. Volatility increases. Trust quietly drains out of institutions. This is how late-stage collapses begin, not with chaos, with caution. Businesses stop investing as far ahead. Households become more defensive. Governments struggle to fund promises made in a different era. The system becomes more expensive to maintain just as it becomes less productive. Debt grows faster than the economy. Support grows faster than growth. Promises grow faster than resources. At some point, the imbalance becomes impossible to ignore. A currency weakens too much. A bank fails. A government loses credibility. These events do not cause a collapse. They reveal it. Once that happens, everything accelerates. People demand higher wages to keep up with prices. Investors demand higher returns to hold risk. Governments must borrow more just to function. The spiral feeds itself. The old order does not disappear overnight, but it stops being trusted. And when trust is gone, even powerful systems become fragile. This is when social tension rises. Those closest to money and assets protect themselves. Those dependent on wages and savings feel squeezed. The divide widens. History shows that this phase is when empires truly lose their grip, not because they run out of resources, but because they lose legitimacy. People no longer believe the system works for them, and a system that depends on belief cannot survive without it. The future does not look like a clean break. It looks like confusion, volatility, and constant adjustment. Some parts of the economy will still grow. Others will quietly shrink. Life will go on, but with more uncertainty and less trust. Understanding where we are in this cycle does not mean predicting collapse. It means understanding risk. And risk changes everything. If you want to keep following this story, how systems rise, how they fracture, and what it means for people living inside them, that's exactly what this channel is built to explore. So if this kind of analysis helps you see the world more clearly, make sure you're here for the next chapters.